If you think Malaysia is going to glide smoothly into 2027, look again, because the recession dashboard just lit up yellow on 3 different gauges at the same time. I am not here to fearmonger. I am here to walk you through what the late 2026 macro picture actually looks like for a Malaysian trader or investor, and why the KLCI, the ringgit, and palm oil are all sitting on the same fault line. Start with the yield curve. The US 2-year and 10-year spread has been whipping around for months, and every time it normalizes after a long inversion, a slowdown tends to follow within 12 to 18 months. That clock is ticking right into our late 2026 window. Layer on softening global manufacturing PMIs, a China consumer that still has not fully rebounded, and you have a demand picture that is fragile. Not collapsing, but fragile. Now bring it home. The KLCI has been grinding sideways, while regional peers like the SET and the STI have shown stronger leadership. That relative weakness is a tell. If global risk appetite cracks, indices that are already lagging usually break down first. Watch the support zones on the monthly chart, and watch foreign fund flows on Bursa, because foreign selling tends to accelerate before any real headline hits. The ringgit is the second flashing light. Persistent dollar strength, narrowing interest rate differentials, and softer commodity revenues all point to continued pressure on the MYR. A weaker ringgit imports inflation, squeezes household budgets, and quietly erodes the real returns on your EPF and unit trust holdings. If you are holding ringgit cash, you are already paying a tax you cannot see. Then there is palm oil, the wild card. CPO prices have been volatile, caught between biodiesel mandates, weather disruptions, and shifting demand from India and China. Plantation stocks like Sime Darby Plantation, IOI, and KLK can act as a partial hedge if global inflation reaccelerates, but they can also get crushed if a demand shock hits. So what do? Stress test your portfolio for a 10 to 15% KLCI drawdown. Hold some USD or gold exposure to offset ringgit slippage. Keep a watch list of quality plantation and consumer staple names you would actually want to buy at a discount. And keep cash ready, because the best opportunities in a recession do not come from predicting the top. They come from being liquid when everyone else is forced to sell. If this breakdown helped you think clearer about late 2026, smash that subscribe button and turn on notifications so you do not miss tomorrow's setup.